One of the things, Rick, I see in the markets is the linkage of American technology with China technology stocks. I don't buy it for a minute. How do you interpret the Chinese stock market, and is there an opportunity there?
Yeah, I think it's a cheap market. I think there's enormous anxiety. When I've been to Asia quite recently, the anxiety in the investor base about what's happening in the stock market, but more importantly, the trade dispute is at a very high level and very different from what you see elsewhere in the world. So I think this temporary trade dispute and the discussion about IP is very damaging in the short term. Question is, where do we get to in the longer term?
Well, within that, where do we get in the longer term? We're going to come out of December 1, December 2. We're going to move on to the rhetoric. Maybe we see new tariffs in January. What is the then what for State Street?
We think the market will do well in 2019. That is, the U.S. equity market will do well. Emerging markets have at the epicenter, in a way, China. And if the trade dispute moves on, I think that's absolutely fully priced in emerging markets. They are cheap. But at the moment, it's a little bit of a value situation that has a cloud hanging over it. So we need to see that cloud lift before we're ready to really invest in emerging markets and capture that value premium.
Okay, how much does a trade war escalation actually hurt world growth? And if you look at, past policy, foreign policy from the Trump administration, it seems that they talk tough, but then kind of dial it back.
Well, I think that's a hopeful explanation of what might happen, and maybe it's realistic because the election timetable of Donald Trump suggests he has to have these deals done at some point relatively soon so that he can make sure the wheels don't fall off the U.S. economy. But the damage it's causing is delayed investment spending and lack of confidence amongst businesses, mainly in China and emerging markets, but it is going to spread elsewhere, and we've seen PMI dropping rapidly in Europe as well.
Okay, but could a trade war actually start a recession if it's coupled with the end of the tax cuts in the U.S., maybe some emerging market turmoil, possibly a higher dollar?
I think if it escalates beyond this point and investors and businesses firm up their view that this is going to continue, absolutely it could cause a recession.
Rick, what should people do with boring retirement accounts? I mean, it's Barron's 101. Let's get out front of Barron's. John Farrell reads Barron's cover to cover every weekend, gets a lot of value out of it. Give me the Barron's angle on a Wednesday. What do you do with a retirement account to get into next year?
Well, firstly, recognize you shouldn't be doing short-term trading. You have a very long horizon, typically 30, 40, 50, 60 years, and you should think about how you earn the risk premium, how you diversify. And that's why things like target date funds have been dominant in many people's retirement savings accounts. You need to have a long-term perspective and be prepared to absorb some of these downdrafts in markets.
I mean, how do you interpret, I'm bringing it up here, folks, I'm doing it in real time, which is what we do at Surveillance the day before Thanksgiving. We do everything in real time. Apple, we're enjoying down 23%. That's the Apple plunge that we've seen. I think Sir John Templeton, Rick Lacaille, would say shares are on sale. But we don't feel that way, do we, in a massive decline?
You don't, because the market then tells you, well, fundamentals are getting worse as well. So they draw a conclusion from the price to the fundamentals. So there's a kind of reverse of the normal causation that you sometimes see in markets. But there are many other opportunities other than a single stock. If you look in emerging markets, there is a value opportunity there that entails some risks. So you've got to take some short-term drawdown. But I reiterate the point, if you're thinking about retirement saving, that is a really long-term game, and you can't be high-frequency trading your way to success.